Okay, this is another video I need to make for better understanding of how to trade synthetic indices. Even though you don't understand, market structure, some of these important things, a simple thing you need to know is what I'm going to be telling you now. Now, if you are trading, whether you are drawing your line, trend line, drawing everything, there is something called confirmation entry, which is very, very important. Either you are a scalper, you are a day trader, you are a swing trader, whatever category you fall into, confirmation entry is very, very important. Now, this confirmation entry is what is going to determine whether you to enter a trade or to wait. Do you understand? Now, there are time frames you should be checking out if you want to, check confirmation entry. We have the 5 minutes time frame. That is if you are a scalper. That is, you can decide to check your setup on the bias of your setup on, let's say, 1 hour time frame, get confirmation entry on 15 minutes or 5 minutes. Okay, you get confirmation on 5 minutes. If you check your bias on 4 hours time frame, you can get confirmation on what? You can get confirmation of 15 minutes. Now, aside that, there is something very, very important I want you to understand. Now, I did a video the last time about this concept, which I want to explain again now. And the concept is, it is very simple. I want to show you something. There we have different type of confirmation entry. We have bullish engulfing, and then we have bearish engulfing. Sure, you understand? Now, this is the major confirmation. What is bullish engulfing candle or bearish engulfing candle? These are candle that shows a sign of strength. If you see this kind of candle, maybe the market has been on uptrend for some time. Let's say the market has been buying for a whole day, and then you are waiting for when the market will start selling. Now, there is confirmation that will show that, okay, the market will start selling. You need to get this confirmation right before you now enter that sell. You don't want to enter a sell at a wrong place, only for you to get in and then the market starts buying. Now, there is confirmation. Now, bullish engulfing, bearish engulfing, these are the major confirmation. And another confirmation is weak reversal. I hope you get weak reversal. So, example of bullish and bearish engulfing is this. Let me cycle it from the chart. This is an example of bullish engulfing. Sorry. This is an example of bearish engulfing. This one candle, you can see that this one candle cancels. These are previous candles. Do you understand? These are previous candles. How many candles if you count it? This is 1, 2, 3, 4, 5, 6. Like 6 candles or 7. Now, only one candle. This one big candle, only one candle cancelled all 6 previous candles. That is to show you that the bearish movement is coming. Do you understand? And you will see that after this one candle, the market did what? The market reversed back to that zone. Do you understand? So that is what you should be looking out for. Bullish engulfing candle, bearish engulfing candle. If you check your chart very well, you are going to see these candles. That is one confirmation. Another confirmation is rejection candle. Rejection candle simply means that market has been buying. Market was buying, and then all of a sudden you see a weak rejection. A weak rejection. Now, market can present double confirmation. Market can present both the bullish engulfing confirmation and weak rejection confirmation. Example is this and this. First of all, the market rejected the buy. The market was buying like this. The market was buying to this up, and then followed by You can see that the market was buying to the upside. Then there was a rejection, a weak rejection, then followed by what? Bearish engulfing. Now this bearish engulfing, previously you will see that it cancelled more than five candles. Now after the market cancelled more than these 5, what you just need to do is wait for the market to do what? Reverse back to that zone where the bearish engulfing started, and then you sell from there. So now you have gotten double confirmation. You have gotten what? You have gotten a weak rejection that shows that the sellers are rejecting the buying pressure. The sellers are rejecting the buying pressure. Then followed by a bearish confirmation candle. Now this is a bearish confirmation candle. One candle that cancels a lot of, the previous buy or sells. This can happen in a downtrend or uptrend. So you just wait for the market to reverse back to that zone and then continue selling. You wait for market to reverse back to that zone and continue buying. Very, very simple. Do you understand? Now this is 4 hours time frame. In the last video I told you that even though you don't know when to enter the market from, treat trading as probability. Always have that at the back of your mind, that this is a game of probability. You cannot be right every time. You cannot be right every time. Now I said that if the market is buying and then you don't know where to enter the market from, just look for where there is, an impulse movement in the market, either a bullish candle or a bearish candle. Bullish or bearish candle, those are the things that you need. And you should be looking at higher time frame. Now this is 4 hours time frame. If we previously check what is happening in higher time frame and then we check most of the candles, the bullish candle, the bearish candle, you will see that this thing plays out the most. Or let's go to daily time frame. You see most of these things are on higher time frame. It can happen in daily time frame. You will see that where major movement always starts. The major movement always starts when the market gets to a major place where there is an impulsive candle movement, where we have, example is this zone now, this particular zone here. The market gets to that zone and then the market started doing what? The market started buying. The market started selling. I hope you get. So this is what we'll treat today. I'm going to show you how to treat something like this. Do you understand? Major demand and major supply zones. Follow for more.